So here's a fun fact that'll probably ruin your day. The average American needs to earn $115,000 a year just to afford a typical home right now. And if you're making the actual median income in this country, you're priced out of over 99% of homes for sale. Yeah, you heard that right. 99%. The American dream isn't just harder to reach anymore. For millions of people, it's completely out of reach. And today, we're going to break down exactly how we got here. Look, I know what you're thinking. Another video about how expensive houses are. Great. But stick with me here, because this isn't just about complaining. We're going to dig into the actual numbers, the real reasons this happened, and most importantly, what you can actually do about it. Because whether you're trying to buy your first home, or you're just trying to understand why your rent keeps going up every single year, this affects you. Let's get into it. All right, so first things first. Let's talk about where we actually are right now. The median home price in America just hit $420,000. $420,000. To put that in perspective, back in 2020, that number was around $330,000. That's a 27% jump in just 4 years. Your salary didn't go up 27% in 4 years, did it? Yeah, mine didn't either. But here's where it gets really wild. If you go back to the year 2000, the median home price was about $170,000. So we've more than doubled in just over 2 decades. Meanwhile, wages? They've barely kept up with regular inflation, let alone housing inflation. Let me give you a real example. Meet Sarah. She's 32, works as a teacher in Phoenix, makes about $55,000 a year. That's actually pretty close to the median income in the US, which is around $60,000. Sarah's been saving for years. She's got $30,000 in the bank for a down payment. She's done everything right. But when she looks at homes in her area, the cheapest decent house she can find is $380,000. With a 20% down payment, she needs $76,000 just to get started. And even if she could scrape that together, her monthly mortgage payment would be around $2,800. Add in property taxes, insurance, and maintenance, she's looking at over $3,500 a month. That's more than her entire take-home pay. Sarah isn't lazy. She isn't bad with money. The math just doesn't work. And she's not alone. There are millions of Sarahs out there right now. So how did this happen? How did we go from housing being expensive to housing being completely impossible for regular people? It's not just one thing. It's like 5 or 6 different disasters all happening at the same time. Let me break it down. Problem number 1. We just don't have enough houses. This is the big one. We are short somewhere between 4 and 7 million homes in this country. Million, with an M. After the 2008 financial crisis, construction basically stopped. Builders got burned, banks got scared, and we just stopped building enough homes. For over a decade, we built way less than we needed. And now, all those years of not building caught up with us. Think about it like this. Imagine if we stopped making new cars for 10 years, but the number of people who needed cars kept growing. What would happen to car prices? They'd go through the roof, right? Same thing happened with housing. Problem number 2. Interest rates went absolutely crazy. Remember when mortgage rates were like 3%? That was just a few years ago. I know people who locked in rates at 2.75%. It was insane. Well, those days are gone. Right now, mortgage rates are hovering around 7%. Some people are seeing rates over 7.5%. Here's what that actually means in dollars. A $400,000 mortgage at 3% would cost you about $1,700 a month. That same mortgage at 7%, over $2,600 a month. That's almost $1,000 more every single month for the exact same house. So even if home prices had stayed the same, which they didn't, your monthly payment still would have gone up by like 50%. Problem number 3, investors and cash buyers. Okay, this one makes people really angry, and honestly, I get it. Big investment firms, foreign investors, and even just regular wealthy people with cash are snapping up houses left and right. In some markets, cash buyers are winning 30% to 40% of all home sales. If you're trying to buy with a mortgage, you're competing against someone who can close in a week with no contingencies. Guess who usually wins? And here's the kicker. A lot of these investors aren't even buying to live in the house. They're buying to rent it out or flip it, which means houses that could have been someone's home are now just investment properties, which drives up both home prices and rent prices. Problem number 4, where you can afford, you don't want to live. Yeah, there are still some affordable places in America. You can find houses for $150,000 or $200,000, but they're usually in the middle of nowhere with no jobs, no amenities, and sometimes no future. Meanwhile, the places where the jobs actually are, where people want to live, San Francisco, Austin, Denver, Nashville, even Boise, freaking Idaho, those places are completely out of control. The median home in San Francisco is over $1 million. In Austin, it's over $550,000. Even in formerly affordable cities like Charlotte or Tampa, you're looking at $400,000 plus. So your options are, buy somewhere you can't work or don't buy at all. Now, you might be thinking, okay, but I'm renting, so this doesn't really affect me. Wrong. This affects everyone. When people can't afford to buy homes, they stay in the rental market longer. More renters means more competition for rental properties. More competition means landlords can charge whatever they want. The average rent in America just crossed $2,000 a month. $2,000. For a 1 or 2 bedroom apartment in most cities, you're looking at $1,800 to $2,500. In expensive cities, try $3,000 or more. So people are spending 40%, 50%, sometimes 60% of their income just on a place to live, which means they can't save for a down payment, which means they stay renters, which keeps demand high, which keeps rent high. You see the cycle? And it gets worse. When people spend all their money on housing, they don't spend it on anything else. They don't go to restaurants. They don't buy new cars. They don't take vacations. They definitely don't start businesses. The whole economy slows down. Plus, people are delaying getting married, having kids, switching jobs because they can't afford to move. Housing isn't just an economic issue. It's affecting how people live their entire lives. Before we get to solutions, let's kill a few myths that keep floating around. Myth 1, just move to a cheaper city. Okay, but move there and do what? Work at the local gas station? Most cheap cities are cheap because there aren't good jobs there. And with remote work getting cut back at a lot of companies, you can't just assume you'll work remotely forever. Plus, moving costs money. Like a lot of money. Moving across the country can easily cost $5,000 to $10,000. If you're already struggling, that's not happening. Myth 2, just buy a fixer-upper. Have you seen what fixer-uppers cost now? Even tear-downs are selling for $300,000 in some markets. And unless you're a contractor, fixing up a house costs way more than you think. We're talking $50,000, $100,000, sometimes more. Plus, most people don't have the time or skills to renovate a house while working full-time. Myth 3, you just need to save more. No, the math literally doesn't work for millions of people. If your rent is $2,000 and you make $4,000 a month after taxes and you've got student loans, a car payment, groceries, insurance, where exactly is this savings supposed to come from? People aren't buying lattes and avocado toast instead of houses. They're making real choices between paying rent and paying off debt. All right, enough doom and gloom. Let's talk about what you can actually do if you're trying to buy a home in this insane market. Strategy 1, get creative with financing. Look into FHA loans. You only need 3.5% down instead of 20%. Yeah, you'll pay PMI, and yeah, it'll cost more over time, but it gets you in the door. Some states have first-time homebuyer programs with down payment assistance. We're talking $5,000, $10,000, sometimes more in free money. Look up your state's housing finance agency. Also, consider asking family for help. I know, not everyone is family who can help. But if you do, maybe they can gift you money for a down payment. There are legal ways to do this that won't mess up your mortgage. Strategy 2, consider different property types. Condos are usually cheaper than houses. Yeah, you've got HOA fees, but the purchase price is lower, which means a lower down payment and lower monthly payment. Townhouses are another option. Multifamily properties where you live in one unit and rent out the others. That rental income can help cover your mortgage. You could even look at mobile homes or manufactured housing in some areas. It's not for everyone, but it's a way to own something. Strategy 3, Location flexibility. If you work remotely, even part-time, look at cities within 30 to 60 minutes of where you currently are. Prices can drop significantly just by going one county over. Look at up-and-coming neighborhoods instead of already hot areas. Yeah, there's more risk, but there's also more opportunity. Strategy 4. The house hacking method. Buy a place with extra space and rent out rooms. I know someone who bought a 3-bedroom house, lives in one room, and rents out the other 2 on Airbnb. The rental income covers most of his mortgage. Or get a duplex, live in one side, rent out the other. Your tenant is basically paying your mortgage for you. Strategy 5. Build your credit and income. This isn't quick, but it matters. A credit score over 740 gets you the best rates. Every point of interest rate you can shave off saves you hundreds per month. And look for ways to increase your income. Side hustles, asking for a raise, switching jobs. In this market, you might need to make $10,000 or $20,000 more just to make the numbers work. Strategy 6. Wait, but wait smart. If you absolutely can't make it work right now, that's okay. But don't just wait and hope. Save aggressively. Build credit. Watch the market. When rates drop or when there's a correction, be ready to move fast. And while you're waiting, make sure your rent isn't eating you alive. Get a roommate if you can. Move to a cheaper apartment. Every dollar you save now is a dollar toward your down payment later. Now, let's be real. Individual strategies are great, but they don't fix the actual problem. We need serious policy changes in this country. We need to build more housing, like way more, millions of units, and not just luxury condos. Affordable housing, starter homes, workforce housing. We need to make it easier and cheaper to build. That means zoning reform. Right now, tons of cities make it basically illegal to build anything other than single-family homes. We need to allow duplexes, triplexes, small apartment buildings in more places. We need to address the investor problem. I'm not saying ban investment entirely, but maybe we should tax the hell out of investors who buy up single-family homes just to rent them out. Or give tax breaks to first-time home buyers to level the playing field. We need to bring interest rates down, but that's complicated because it ties into inflation. The Fed is doing what it can, but it's a balancing act. We need better wage growth. If wages had kept up with housing prices over the last 20 years, we wouldn't be in this mess. But that's a whole other conversation about corporate profits, worker rights, and income inequality. Look, I'm not naive. These changes aren't happening tomorrow. Real policy change takes years. But we need to start talking about it, voting on it, demanding it. Because if we don't, home ownership is going to become something only rich people can do. And that's not the America most of us want to live in. Here's something nobody talks about. Maybe, just maybe, we need to rethink what the American dream even means. For decades, we've been told that owning a home is the ultimate sign of success. And yeah, there are real financial benefits to owning. Building equity, stability, potential appreciation. But maybe the dream doesn't have to look exactly like it did for your parents or grandparents. Maybe it's okay to rent longer if it means you're in a city with better job opportunities. Maybe it's okay to own a condo instead of a house with a yard. Maybe it's okay to house hack or live with roommates longer than you planned. The point is, don't let society's expectations make you feel like a failure if you're not on the same timeline as previous generations. The game has changed. The rules are different now. Your worth isn't tied to whether you own a home by 30 or 35 or 40. That said, you also shouldn't give up on the dream if it's what you want. Just be smart about it. Be patient. Be strategic. And don't go broke trying to keep up with people on Instagram who are probably in debt up to their eyeballs anyway. Let me tell you about a few people who figured it out despite the odds. Meet Marcus. He's 28, lives in Denver, which is one of the most expensive markets in the country. He couldn't afford anything on his own, so he teamed up with his best friend from college. They bought a duplex together. They each own 50%. They live in separate units. It's not traditional, but it worked. They got into the market when everyone told them it was impossible. Then there's Jennifer. She's 35, single mom, working as a nurse in Florida. She used an FHA loan with just 3.5% down. Found a small townhouse that needed some cosmetic work. She slowly fixed it up herself with YouTube tutorials. 5 years later, it's worth $100,000 more than what she paid. She's building real wealth now. And there's David and Maria. They spent 2 years living in a tiny apartment, eating at home, driving old cars, and saving like crazy. Everyone thought they were being extreme, but they managed to save $60,000 for a down payment. They bought in a neighborhood that was just starting to turn around. Now, they're sitting on $150,000 in equity. The point is, it's hard, really hard, but it's not impossible. You just have to be creative, patient, and sometimes willing to do things differently than you planned. Look, if you're feeling angry or frustrated or hopeless about all this, that's totally valid. You did what you were supposed to do. You went to school. You got a job. You work hard. You're responsible with money. And you're still priced out of the market. That's not fair. It's not your fault. And you're not alone. Millions of people are in the exact same boat. And honestly, previous generations don't fully understand because they didn't deal with this. When they bought their first home, it cost 2 or 3 times their annual salary. Now it costs 6 or 7 times. It's just not the same. So give yourself some grace. Stop comparing yourself to people who bought homes 10 years ago or to your parents who bought in the 90s. Different world, different economy, different rules. What matters is what you do next with the information you have now. Here's the thing. Markets are cyclical. They go up, they go down, they correct. We're probably not going to see 2020 prices again, but we might see rates come down. We might see more inventory hit the market. We might see some investors exit when returns aren't as good anymore. And even if prices stay high, your income will hopefully grow over time. That house that's out of reach today might be within reach in 3 years if you're strategic. Also, remember that once you do get into the market, you lock in your housing cost. Yeah, your mortgage payment is high, but it doesn't go up every year like rent does. 10 years from now, your friends who are still renting will be paying way more than you are. And you're building equity. Every payment you make, part of it goes toward actually owning more of your house. That's real wealth building that renters don't get. So there's a light at the end of the tunnel. It's just a longer tunnel than it used to be. All right, we've covered a lot today. The American dream of home ownership isn't dead, but it's definitely on life support for a lot of people. We talk about why this happened, how it affects everyone, not just buyers, and most importantly, what you can actually do about it. If you're trying to buy a home right now, remember these key things. Get creative with financing. Look at FHA loans and first-time buyer programs. Consider different property types and locations. Be flexible. Build your credit and income. Every bit helps. Don't give up, but also don't go broke trying to force something that doesn't work yet. And stay informed. Markets change. Opportunities come up. You need to be ready. If this video helped you understand the housing market better, do me a favor and hit that subscribe button. I make videos about personal finance, investing, and real economic issues that actually affect your life. Drop a comment below and let me know. Are you trying to buy a home right now? What's been your biggest challenge? Or if you already own, what advice would you give to first-time buyers in this market? And if you want to go deeper on any of this stuff, I've got other videos about saving for a down payment, improving your credit score, and finding the best mortgage rates. Links are in the description. Thanks for watching. And remember, the dream might look different than you expected, but it's not out of reach. You just got to be smarter and more strategic than ever before. I'll see you in the next one.